A 2% June retreat left the S&P 500 down 0.25% for the second quarter of 2015, putting an end to its 9-quarter winning streak. The quarter's biggest economic events occurred in late June. Greece defaulted on its debt, the Commonwealth of Puerto Rico said a default was imminent, and China's stock market plunged. The Federal Reserve seemed committed to raising interest rates before the end of the year, even as it lowered its 2015 economic forecast. Spring brought more home buying, higher oil prices, improved hiring, and a number of encouraging signs that the economy was pulling out of a winter slump. Even with all those positives, the headwinds in the stock market were too strong to allow a broad advance. The second quarter saw the Federal Reserve revise its projections for 2015 GDP downward. Its June 17th policy statement also signaled at least one interest rate hike later this year, with the first move most likely coming in December. The economy added enough jobs in the quarter to drop unemployment rate to its lowest since April of 2008. America's factory and services sectors showed continued growth during the quarter. Consumer confidence readings were higher by quarter's end, and retail signs experienced the spring thaw as personal spending was up. As early as April, there were indications that Greece might default on its debt. Then it missed a June 13th deadline on a 1.5 billion euro debt repayment, triggering a global stock sell-off as investors glimpsed a crack in the framework of the European Union. The quarter ended with Prime Minister Alexis Tsipras and the ruling Syriza party announcing a July 5th national vote on whether Greece should accept further austerity measures as a condition of financial aid. 61% of the electorate voted no, opening the door to Greece's exit from the European Union and leaders with a hard choice for July. Either play hardball with Greece and risk a humanitarian crisis, or play softball with Greece and placate its people in a last-ditch effort to keep it in the Eurozone. On July 6th, The Guardian reported that the Greek banking system held only about 500 million euros, or about 45 per person. This was the last development the Eurozone needed as it tried to mount an economic recovery from its recent recession. Puerto Rico Governor Alejandro Garcia Padilla told the world on June 28th that the Commonwealth could not pay its $72 billion in public debt, shocking many investors, but not many economists. Padilla's administration is exploring a Chapter 9 bankruptcy as an option, but under current federal law, that option is only available to U.S. cities, not territories. The Greek and Puerto Rican debt crisis did not wholly distract investors from troubles in China, namely the panic in its stock market. The Shanghai Composite fell 24% between June 12th and July 4th. June was the worst month for both the Dow and the S&P 500 since January. The NASDAQ, however, was up almost 2% for the quarter. The quarter's best performing stateside index was the VIX, advancing over 19% in 3 months. As we move forward, it looks as though Greece's creditors may just have to take a haircut, since Greece can't hope to function without access to credit. Negotiations to either restructure its debt or lessen the principal seem a given. So far, U.S. stocks have come through this crisis with far less damage than European shares. Hopefully that continues, with the Eurozone finance ministers seeking a quick solution and a new earnings season providing a diversion. Perhaps the third quarter will bring relative calm and a renewed confidence for consumers and investors. That concludes our update for the second quarter. Our next video will be in October. As always, thank you for placing your trust in LifePlan Financial Group. We hope you have a great summer.